We are entering an age of perpetual uncertainty. Instability is no longer a temporary disruption. It has become an embedded feature of the global landscape. Growth trajectories are diverging, supply chains remain exposed. New centers of tension are emerging. This is no longer a world defined by a single dominant risk, but by a more complex and persistent risk environment. As a result, individuals are reassessing how they think about security, opportunity, and long-term planning. Citizenship is no longer only about legal status or national identity. It is increasingly viewed as a strategic asset, enabling resilience, access, and long-term optionality across jurisdictions. The World Citizenship Report 2026 provides a data-driven framework to understand this shift. Evaluating 188 jurisdictions across 5 core motivators, combining empirical data with behavioral insights. From safety and security to quality of life, economic opportunity, mobility, and financial freedom. Germany ranks first for quality of life. Iceland leads in safety and security. China tops economic opportunity. Survey data shows that individuals are prioritizing family security, long-term protection, and resilience over lifestyle alone. Citizenship is no longer a static designation. It is an active component of long-term planning. In a world defined by uncertainty, positioning matters more than ever. Citizenship is being repriced.
Good morning, everyone, and welcome to today's Private Markets webinar. My name is Mo Bellucci, and I'm delighted to be hosting today's conversation on behalf of Private Markets Group. By way of introduction, I'm a chartered wealth manager and senior consultant with 25 years experience working across international financial services, building strategic partnerships between family offices, private banks, fiduciaries, and advisors across the world's leading international financial centers. Cross-border planning for entrepreneurs and multi-generational families is a subject I'm very passionate about, so I'm really looking forward to today's conversation. Thank you very much for joining us. We have a wonderful group with us today from across the family office, private banking, and private wealth advisory community, and we're delighted you're here. Today's conversation is titled Citizenship as an Asset Class: What Private Wealth Gets Wrong About Mobility. And I think for many of you, this is a topic that has shifted significantly from being a peripheral question that occasionally comes up with clients to something that is now very much at the center of planning conversations across family offices and private banks. But before we begin, a few housekeeping notes. If you have a question for our guests today, please drop it into the Q&A function, not the chat, and we will get to as many as we can in the final section of the hour. We also have a number of questions that have come in from our network ahead of today, which we will be working through during the conversation. Now, I'm extremely pleased to be introducing today's guest. Micha Emmett is the Group CEO of CS Global Partners, one of the world's most respected advisory firms, specializing in citizenship by investment, residency by investment, foreign investment law and strategic government advisory. CS Global Partners also publishes the World Citizenship Report, the flagship annual benchmark that has become essential reading for anyone advising internationally mobile families. Micha, welcome. It's a pleasure to have you with us this morning.
Hi, Mo. It's a great pleasure to be here. Thank you for having CS Global and myself on the webinar today.
Thank you. Let's start at the very beginning, Micha, because I want to make sure that everyone with us today has a clear picture of what we're actually discussing. The World Citizenship Report, I think it's fair to say, is the most comprehensive annual benchmark in this space. But for those joining us today who perhaps haven't encountered it before, can you tell us what the report covers, how it's structured, and why it's become such an important reference point specifically for the private wealth industry?
Mo, it's a brilliant starting point because the World Citizenship Report really does stand, you know, separately from any other of the indexes that look at citizenship and residence. And I'll explain to you why. The reason we came about putting the World Citizenship Report together was because we identified the fact that there was this gap and that nothing was filling it. You can price equity, you can rate a bond, there's a benchmark for a fund, but within the citizenship by investment and then residency by investment realm, there was this tendency to focus on ranking of passports. So it got me thinking. We thought, well, should we do a passport index? Being one of the leading firms in the world, it sort of seemed to be the appropriate thing to do. And I took a step back and I really thought about, well, what is it that's important to a high net worth individual? What is important to these families that we spend our time advising and guiding them? So I wanted to create something that would assess the relative strength of citizenship beyond where you can travel to, and to find the core reasoning of what drives these decisions in the first place. So in order to do that, our very, very first index, we did quite an extensive research. So it wasn't just about having 5 motivators, running numbers. We started off by interviewing a data set of high net worth individuals, people within the private client space, and economists. And we just sort of picked everyone's brain and asked them what citizenship meant to them, and also why they, in the case of clients, why they had chosen a second citizenship from whichever country. So we started off with that, and then we thought, well, let's widen the net and let's do a survey. And we surveyed, and we do this pretty much every year for the index. We survey anything between 500 to 1,000 high net worth individuals, carefully picked from across the globe. So the Americas, Europe, Middle East, Africa, and obviously Asia, in order to identify what these key motivators are that makes a high net worth individual decide or assess the citizenship they have, and perhaps the citizenship or residence that they're looking to. And off the back of that, it's amazing because data speaks so loudly, and it 100% confirmed what I had seen with clients and what I was experiencing in terms of the reasoning. And the number one indicator was safety and security. And that was back in 2022 when we first launched the first WCR. And so we built this of 5 motivators, one being safety and security, as I've mentioned, economic opportunity, number 3 is quality of life, number 4 is global mobility, and number 5 is financial freedom. So each jurisdiction, we benchmark 188 jurisdictions across these 5 factors, and each jurisdiction is scored out of 100 on each of those motivators, and then there's an overall ranking for a weighted aggregation. And it really speaks volumes because, as I said, the data never lies. It actually imitates exactly what we're having and the conversations we're having in our boardroom with our clients.
How has the conversation around citizenship and global mobility shifted since the report was first launched?
Well, it's shifted materially in that, it's no longer a straight line from travel to risk. So obviously, as I've mentioned, the earlier, the very first was a WCR report, was challenging that kind of narrow passport ranking view, by showing that global mobility was not the only part of a broader citizenship calculus. But then, we also looked at else what mattered, as I've mentioned, the 5 other areas. And of course, quite importantly, what came up quite strongly in the early days was the sense of belonging. Let's move forward to 2023 and 24. And that conversation was still closely tied to freedom, remote work, because remember we were coming out of the COVID era, digital transformation.
Mm-hmm.
Specifically in 2024, we had a big focus on elections and how that would affect the thinking of families, high net worth individuals. I mean, we had more elections in 2024 than we'd had in any other year. I mean, 2/3 of the world were voting. And that just led to a more practical focus on moving between jurisdictions. The impact was felt because of the outcome of the elections that many people didn't expect. So what we saw is, moving away, obviously, from that sort of holiday access, visa-free access, moving more towards, well, where could I maybe spend half my time working in this jurisdiction, and what does that look like for me? In 2025, we felt that the emphasis was more human, and we were seeing that clients were not simply fleeing from instability, because now that the elections had come, governments had started making decisions, these new governments, and the impact was that we were seeing high net worth individuals exploring the choice to leave or the choice to stay. And that's quite impactful because really indicates a much more thorough move and moving not just for short periods of time, but actually moving families. So what we were seeing is that the high net worth individuals were sort of weighing kind of safety, comfort, stability, values, and their quality of life. Well, roll on 2026, and I'm sure everyone here can will remember, the first days of January 2026, and I think that was enough to set the tone for the year. And of course, that meant that there was a strong focus on safety and security on all levels. And it didn't matter where in the world you were located or lived or resident. I think that we really felt the inertia of the decision making around that. People just didn't know what to do because suddenly there just didn't seem like any safe space. And, we moved through to February, March. I mean, I don't need to reiterate what was happening in the geopolitical circles. And of course, what we were seeing is that the high net worth individual and his family, they weren't driven by fear, but rather by potentially looking at being optimistic about, well, what are the alternatives? And looking for a tool for resilience, agency, and most importantly, long-term positioning. So that's what we've really seen in 2026, is that we're seeing families look at this not in isolation, but as a greater part of the asset mix. And, that 2026 data really takes us further, because in our survey, when we posed to respondents, how many would likely consider an additional citizenship, we got a resounding 71% of our respondents. It's the highest number of respondents that have ever said, yes, we want to consider an additional citizenship. So we didn't read it as a panic response as much as more that the whole citizenship and residence discussion is becoming more normalized in conversation. And so individuals, and this is why it's so important for everyone on this webinar to understand why that shouldn't be discussed separately to everything else within their asset class and their financial planning, because it actually underlies all of these decisions.
You mentioned the data there, Micha. So let's move on to the data, because that's where things get even more interesting. The title of today's webinar makes quite a bold claim that the private wealth industry is getting mobility wrong. When you look at the 2026 data, what dimensions are high net worth clients and their advisors actually weighing up? And where are the gaps in understanding the most significant? Where do you see that?
So, I mean, that's quite a broad, question. What I would say is where we're seeing the debate on mobility going wrong is that we have to think outside the cliches of the topic. While safety and security will always lead, quality of life really came up highly in the data. And yes, followed closely by financial, business, and career opportunities, because obviously it's important to individuals. Something has to support that quality of life. But what we were seeing is really the ranking, while it was very consistent over the last 5 years, you can see that there's an optimization towards looking at what direction to go. And so when we talk about sort of present day motivations in 2026, while business and professional opportunity leads ahead of sort of investment diversification, we found that, for example, topics like tax efficiency were trailing behind. So you're looking at kind of a longer term strategic focus, more family security, generational protection. But what was interesting was some of the jurisdictions that popped up that weren't necessarily in the top 10 previously. And that was fascinating, because while we saw the European countries hold their number one position, or at least 18 of the top 20 places were European countries and the Anglosphere or their closest peers. It was interesting because obviously these are known as centers of stability, but it was interesting that there's a change. Fewer people are willing to depend on just that one jurisdiction. And so you're looking at clients wanting to extend beyond that. And we saw the East and the South really rise up in the rankings. As I mentioned to you, it's based on 5 different motivators. And within those 5 different motivators, you could see different data. So, for example, Germany took first place for quality of life. And that really shocked me, because they've never been kind of in the top 3. It's usually Norway, Switzerland, Finland, and Sweden. But then when we looked back at the data and we looked back at what our high net worth individuals were saying in terms of the safety and security and also quality of life, things that were important were sort of healthcare, education. So it was interesting to see how Germany has sort of taken this place overall. Then, moving to the East, because I sort of mentioned that Singapore led in both the global mobility and financial freedom. So really, really strong jurisdiction. And they always rank highly and consistently. So I think that says a lot for Singapore as a country. And then interestingly, China heads economic opportunity. Last year, there was almost a tie between the US and China, but this year, China outranked everybody else. But that's not where it was interesting. What was interesting is that, we saw India, Indonesia, Saudi Arabia, Kazakhstan, and Vietnam all featuring prominently in that economic opportunity. And this just goes to show that while stability still exists and sits in the West, opportunity is increasingly migrating east and south.
That's really fascinating. Were there any more surprises in the year's findings at all for you, Micha?
Well, I would say those are the main ones. Generally, we see, other countries sort of float in and float out. But I would say, Germany coming top, and those sort of Eastern countries really well positioned in the economic opportunity was telling of what what's unfolding in the future.
Mm-hmm, mm-hmm. And I now want to bring in this into the world most of our audience is operating in day to day, because there are always gaps between what the data tells us and what's happening in real client conversations. How closely do the report's findings map onto the questions CS Global Partners is fielding from, let's say, family offices and private banks right now? Are there areas where the reality on the ground is running ahead of, or perhaps behind, what the data would suggest?
So the data and what is happening are working remarkably close. But I would say that in some respects, the conversations on the ground with advisors are running slightly kind of ahead of the data. So, a decade or two ago, an inquiry from a family office was usually reactive. Well, what we're seeing now is the conversation actually coming to the fore, and it's a lot to do with how geopolitically everything's changing so quickly. So what we're seeing is that trust advisors, family officers, and general advisors are asking more pointed questions about how this can happen because of the various changes within, due to elections, tax regimes, but also moving away from people wanting to do it quickly in a hurry. What we're really seeing is how does an additional citizenship sit alongside a property portfolio or a trust structure? So they're more in-depth pointed questions rather than just a quick decision or a side option for the family.
And are those conversations being driven more by opportunity and growth, or are they increasingly about resilience and risk management?
That's a great question. I mean, I think it's a combination. Certainly, a high net worth individual, these are highly intelligent, capable individuals, so they will always be driven by the growth. But at the same time, looking and seeing what's happened in the past 6 months, definitely the conversation is very much around the resilience and how do we make this a long-term decision. So what we're looking is that the data is showing opportunity definitely, leads kind of present day motivations, but the family security and generational protection and resilience to that is actually the long-term horizon view. So clients definitely hold thoughts on both. But for me, if I was advising a client, the long-term factors I think are way more important. And they've got to look at what has happened in the past and also be able to kind of allocate that for the future.
Okay, thank you. Thank you. Another important part of today's conversation is that even among sophisticated advisors and family office professionals, there remains real misunderstanding about what citizenship and residency by investment actually offers as planning tools. Where do citizenship and residency sit along the more conventional diversification strategies? You've touched upon it already, property, equities, alternatives. And what are the most common misconceptions you still encounter in your teams, even at the highest levels of industry?
So in terms of I'll take the first part of the question in terms of CBI and RBI and how that sits along conventional strategies. You've got to look as citizenship and residence options as long horizon planning tools. They hedge a specific risk that financial assets cannot touch. So the risk attached to where you and your family can live, work and belong and be safe is not a short-term decision. It is something that requires, there is a hedge to it because we just don't know which way the world is going. So why it needs to be done alongside another, alongside your overall strategy is because you need to take into consideration the different elements of that. And that's why I think the World Citizenship Index plays so well into that, because we look at all the factors that could affect you and in the long term affect your children and the generations that follow. So it really is a generational planning tool. And just 2 points in terms of actual clients. You can be the wealthiest individual in the world. And we have seen this in the past with individuals sitting in countries where it's suddenly become unsafe. And it doesn't matter how much money they have, they are not able to leave because they have got a single citizenship. And this is what I always say to clients, and I've been saying this for nearly 2 decades. A second citizenship, while it may not seem relevant today, it really is one of your greatest hedging tools for any kind of risk that could happen. So I would leave the audience with that, as a strong indicator. So yes, now talking about the misconceptions, well, I'll discuss 4 specific ones that I think advisors should consider. So one of the things is, this is not about travel. Movement does matter. And yes, it ranks 5th in what people value and treat as, but it's a headline benefit that leads clients to optimize the wrong thing. So it doesn't matter how many, if it's 160 versus 172 visa-free countries you can travel to, the difference between those 10 countries are probably negligible. I think more importantly is to understand, and this is where I come to the second misconception, is that this is an escape hatch. So the language of flight capital still clings to this market. This is what the thought process is. But you've got to realize a second citizenship is an optionality, not a panic button. And that's why thinking about getting an alternative citizenship in advance is smarter than waiting to when you've got to press that panic button. Thirdly, there is, advisors often think that programs are interchangeable. So they'll put a list of programs in front of their clients and say, oh, they're all pretty much the same. And this is really not the case. This is probably one of the most expensive mistakes of the lot. So 2 programs may be similar in headline costs, but they differ enormously in governance, due diligence, and long-term security. So buying on price alone is how, a client ends up holding kind of the weakest version of the thing that they wanted. Mm-hmm. The fourth one, and this is probably the one that I should start with, is that there's this misconception that it is only about tax. This is incorrect. Tax efficiency is in the mix. Of course, high net worth individual wants to optimize that. And yes, 22% of present day, it makes up 22% of present day motivations within our survey, but it sits behind opportunity and diversification and long-term horizon. The long-term horizon is family security. So case in point, the UK, in fact, the number of people who actually left were not as high as anticipated, because at the end of the day, when your life is here and your life is, your kids are at school and you've structured your business, you don't just up and go. So these are all the considerations that you've got to think about as an advisor when you're talking with your client. It does not start with tax. It does not start with price. It's not about where you can go visa-free. It really is about sitting down and understanding what the client needs.
I think you've really cleared up some misconceptions extremely well there. Thank you. Now, another question I wanted to ask, and this will also be on the minds of people on today, some of the people on today's call. Is there still meaningful confusion around the distinction between residency by investment and citizenship by investment? And how do clients determine which route is right for their situation?
Yes, there is still a lot of misunderstanding between what the two mean. So, a residency program is great if you're going to live somewhere. It grants you usually the right to live, often the right to work in the country. It can be the first step for the client who wants the presence there, looking for making that country a base without maybe committing to citizenship straight away. Whereas the difference with a citizenship program is that you enter the program with the end point, meaning you get direct citizenship. So there's no sort of just going to live and then seeing. It's an immediate, I make the investment, because usually that's more applicable with citizenship by investment. I make the investment and I directly get the citizenship. Of course, it's very important to understand that citizenship confers almost, it's a heritable status. It's an ultimate status. It's the fullest set of rights that anyone can have. So it also provides you a passport, and in many cases, the ability to pass that status on. And it's really important because often clients will say, oh, well, it's fine if I just have a residence in this country. Well, yes, it is. But residence permits can be cancelled. And that's what I always say to clients. Just think about that. So yes, you may want to have the residency route, but what I would often, and what we're seeing a lot more, is that because this has become more of a commodity for our clients, they're looking at attaching a residency with a second citizenship, alternative citizenship, as making sure that they've hedged all their bets.
I see. And another scenario I wanted to discuss with you is when, let's say, practically when a family office or private bank brings a client to CS Global Partners and says, we need to evaluate our options seriously. What does, rigorous jurisdictional selection look like? And what are the criteria that consistently hold up under, let's say, serious due diligence, illustrated through the sovereign citizenship programs and residency programs that you work with?
It's really important because the industry, the CBI and RBI industry globally is not regulated. And so often what happens is there are a lot of people running around promoting these programs, sometimes incorrectly, sometimes promoting options that aren't even programs. I've had a client crying in my office, coming to me after the fact saying, I spent 20,000 to buy citizenship from this country. First of all, that is not possible. So, I think we have a very sophisticated audience on this webinar, so they would see through those kind of scam scenarios. But it doesn't end there. There are so many new citizenship programs available now, including and residence programs, and it's really important, I think, as a first step, to know who you're dealing with when you're dealing with an agent within the CBI RBI space. When it comes to deciding the citizenship, the number one aspect to look at in terms of a program is the country's rule of law and the stability of the issuing state. So a citizenship is only as durable as the institution behind it, the government behind it. This is a multi-decade commitment. It's not like you can buy it today and sell it tomorrow, because it is not a commodity in that sense. So politically and legal stability cannot be an afterthought. This is the long-term perspective. For the now, what is really important is to look at how the program is managed, so the rigor of its due diligence. And why is due diligence important? Well, the strongest sovereign CBI programs run multi-stage vetting through their dedicated citizenship unit, with independent international checks layered on. So I've just given you at least 3 pointers that you should look for and tick off. And when a program is harder to pass, it means that the citizenship is more valuable, because in the long run, you want a citizenship that you could be proud of when you're using it to, go through a passport gate, or you're using it as identification. So it's really important to look at that. The third thing is longevity and track record. So, for example, St. Kitts and Nevis Citizenship Investment Program, which is the oldest running program in the world. It's been around since 1984. It survived changes of government. It survived external scrutiny. It survived shifts in the international environment. And it has adapted all the way through rather than collapse. Because, there's so many programs that have shut down, whether you're looking 40 years ago, 30 years ago, or in the last couple of years. So this is really important as well, is that longevity. How long has a program been running and how stable is it? Fourthly is transparency. So is there clear law? Are these regulations published? Is there a defined contribution within the regulations? And is it a process that seems properly regulated and clear? It's important because, a process that doesn't tick those boxes, you can't be sure if it's actually a proper program. And then the fifth element that we always look at, and this is probably the first part of the conversation, is it a fit for the family? So who can you include in the application? Can you include dependent children? over the age of 18, up to what age limit is that? Do they have to be in full-time education, or what is the, how do you prove their dependency? Can you include your parents, your grandparents, your siblings? So these are different aspects. How far does citizenship succession allow? Is it 1 generation, 2 generations? Are there residence requirements? Is there a period of time that you have to be seen to be living in the country before you are granted the citizenship, or even post-citizenship grant? And these are all sort of nuanced questions to understand so that you can identify that the program would be the relevant program for your client.
Mm-hmm, mm-hmm. I mean, you've covered a number of things I was going to ask on my next question, actually, in terms of factors. So if we look at the ones you've already mentioned, political stability, regulatory certainty, taxation, succession planning, global reputation, are there any that, in your experience or your team's experience, surprise people?
Yeah, it's a good question. I think what sometimes can be surprising is the countries that make the top of that list. So what you'll see is people will tend to think, oh, European jurisdiction, that must be the best. But then when you tick these factors and you look at them, you'll actually find that, for example, many of the Caribbean citizenship by investment programs far exceed the expectation of their European counterparts. So I think that's where it becomes quite interesting to see the programs that do come out of the top and do kind of meet those criteria and tick those boxes for applicants.
Mm. It must be very competitive, so and
Yes.
that's understandable. Yeah, yeah. Moving on to another very important factor, if we look at regulation, transparency, what the sort of next year to 2 years is going to look like. The regulatory environment around investment migration has changed considerably, as you just mentioned, in recent years. The pace of the change is accelerating, it seems. How would you describe how the market has matured around regulation and transparency? And is that maturity a net positive for the sector and clients?
So we've certainly seen a huge shift in the CBI and RBI regulatory market. Some of that is partly because of what's happened in Europe. You may be aware, but the Cyprus program closed down. Malta had the legal issue with the EU, and so that's had a huge effect on the industry overall, because the ripple effect of those decisions obviously spread across all the programs globally. So what we're seeing is that what is palatable is more regulation, more transparency, and stronger due diligence, not less. The international scrutiny has really pushed kind of serious programs to raise their standards. And I mean, it is a healthy way to move, because it really does set the good programs apart from the less good programs. And I also feel that it's allowing the market to be more professionalized. As I'd mentioned earlier, it's not such a regulated industry. So it's quite important that the countries in their own right really set the bar high. So yes, it is a net positive for both the sector and clients. I think the kind of reputational criticism of this industry lands when a program is opaque or lax, and that's the programs that get more scrutiny. And at the end of the day, and I'll reiterate for the viewers today, is that I would expect that you would be wanting to advise your clients with the best option and route. So you don't want to be going with what looks like an easy option because I can quickly get this or I can quickly get that. You really want to be advising your clients to look at those serious sovereign programs that have tightened their vetting, and that are welcoming international cooperation rather than resisting it. So yeah, I think overall it's positive.
And what about the next 12 to 24 months, Micha? What should private wealth professionals specifically be preparing for, in your opinion?
Well, I think further standardization of due diligence. I've sort of gone on about it quite a bit, but in line with other aspects of kind of the private wealth arena, CBI and RBI programs need to meet that standard as well. And certainly we're seeing that with the serious programs, with the rigorous vetting. So we'll see more of that. And I think there needs to be a balance as well, because it can't be that onerous that people start going, oh, this is too difficult. But certainly countries want to and need to know who they are bringing on board as a citizen, and that is quite critical. What we'll also be seeing is a lot more consolidation. So you'll see maybe a little bit more pressure on the kind of less transparent programs losing ground. And we can expect a wider gap between the serious programs and the rest of these programs. And then I think most relevant to this audience, thirdly, is kind of the deeper integration into mainstream wealth planning, where an additional citizenship will be assessed by the advisors on this call against the same standards as any other long-term holding. So we'll definitely see more of a approach there. And in fact, we're seeing that anyway in some of the CBI programs. So for example, St. Kitts and Nevis is now onboarding alongside something called Priority One. And when you apply for your citizenship at the same time, you also have an opportunity to apply to become a member of this sort of elite St. Kitts and Nevis Priority One group that allows you certain benefits like, trust planning, corporate planning, bank account opening. So it's this beautifully ring-fenced wealth planning product that goes along with a CBI. And I think that in itself explains kind of where the industry is going.
I mean, you just mentioned the audience, Micha. We've got some really excellent questions that have been coming in from the network today. This one has come in from Jonathan in London. He said, we have several clients who already hold substantial international investments and structures. At what point in a wealth planning conversation should advisors be introducing second citizenship or residency? And is there a threshold of complexity or scale at which it genuinely starts to make sense?
So I think the conversation needs to come in earlier than most advisors think. There is complexity to choosing a jurisdiction, and it often is, intertwined with the other factors of, where am I going to live? And what does that mean for my family? What does that mean for my business? What does that mean for my tax? What does that mean for my financial planning? And I wish that advisors would bring that conversation earlier, because it also makes it easier for planning. I think what I would say in terms of how, what the threshold is, again, one's got to balance it according to the client's needs and structures. So where they're already holding substantial international investments and structures, what is the profile, that their long-term objective, have they diversified their assets across borders? So these are, I think, it really very much dependent on the individual case. And that's why it's quite important to speak to a citizenship advisor who understands all these nuances and then can work with the private client advisor to bring the right solution to the table.
Mm-hmm. We've got one here from Isabel in Geneva, asking, has geopolitical uncertainty become the primary driver of the applications you're seeing, or are lifestyle and opportunity considerations still leading those decisions? Has the balance shifted in the past 12 months?
So it's a brilliant question, and certainly there's a yes and no to that. Yes, geopolitical uncertainty is certainly the backdrop. And particularly in the last, I wouldn't say just 12 months, but I would say as far back as 2024, as I'd mentioned earlier, with the elections in so many countries, the outcomes were quite interesting, and that drove a lot of people to make quite clear decisions. And I think what's even more important is that we are seeing individuals from countries that we hadn't previously seen before. So, we were talking about the safe kind of European, and I'm going to throw the US in there, where these individuals were never, the opportunity of talking about an alternative citizenship was just not a conversation you would have. I am having those conversations on a daily basis. And I think it's very much driven by kind of this geopolitical uncertainty, but it's also driven, very importantly, by kind of business opportunity and kind of diversification. So these are leading factors. But as the data showed, quality of life is really a big factor for these individuals. So while they can move their kind of center of gravity from places that may have these geopolitical shocks, or they may see the legal frameworks for businesses change, at the end of the day, this decision of citizenship is very much a real life decision, because it affects your family, it affects your lifestyle. So quality of life is probably the main driver.
Sure. We've actually got a question in from Germany. So Sebastian in Germany, in Frankfurt, asks, we're seeing more next generation clients coming into family offices with quite different priorities from the generation before them. How are younger families influencing these conversations, and are sovereign programs keeping pace with what that generation actually wants?
Yeah, that's a fantastic question, because we're certainly seeing the influence of the younger generations affecting these conversations. They shape the conversation in two ways. I mean, first of all, they are a lot more cross-border thinking. So I think compared to us when we were growing up, there was a smaller group of us who would think about moving to another country, whereas now it's almost second nature. So they expect to study in one country, work in a second, and possibly hold assets in a third, while their parents have a holiday house in the fourth. So this additional citizenship is really part of their infrastructure. I think they also scrutinize the opportunities differently. So they quite aware of kind of the governance and reputation of the programs, and we're seeing a lot more questions around that from kind of the younger generation. It's wonderful to see how involved they are in the whole process. And our data does support this intergenerational pull. We're seeing family security and generational protection lead the long-term motivations of our high net worth individuals and the gaps that people identify at home. So alongside things, we're seeing young people look at economies and how they can't get jobs. And I'm even in terms of kind of wealthier families, kind of healthcare, education, they're all issues sitting in the back of these young people's minds. And so they're very much part of that conversation.
Excellent, thank you. We have a question here from the UK, actually, so quite a few jurisdictions on the call today. So from Charlotte in the UK, what role does legacy and succession planning play when clients are evaluating citizenship options? And is that conversation changing as intergenerational wealth transfer becomes a more live issue across the industry?
So when we asking about kind of longer term strategic benefit of an additional citizenship, certainly family security and generational protection come out on top ahead of everything else. So clients are increasingly evaluating citizenship as a shared family platform rather than just a single person's benefit. And that means succession mechanics are now a selection criteria. So, who qualifies as dependent, how future children are treated, and whether the status can be passed along, obviously vary from program to program, but that should be mapped in context of the family who's sitting in front of Charlotte or whichever advisor is around. I hope that answers that.
That's great, thank you. Here's a really good one, actually, from Marcus in the Netherlands. For advisors who've genuinely never worked in citizenship or residency planning before, what is the single biggest mistake you see them make when they first engage in this area, and how should they avoid it?
So the single biggest mistake is Googling citizenship by investment or citizenship program or passport program and choosing the option that comes up at the top, because this is a very competitive industry and it's very much driven by the investment element of it. So what it means is it's not necessarily the best product that's making it to the top of the list. So I think starting off not with the product, but really looking at what the client needs, and then working with a knowledgeable citizenship advisor to unpack what the opportunities are around, what does the program deliver, what is the pricing, what is the timeline, and then work through that with the client. Yes, price is obviously a deciding factor, but it needs to be juxtaposed against, the governance, and to ensure that a client ends up with the best option. You don't want the client walking away with a citizenship or a passport that doesn't support the needs of the family moving forward. Then I would also look at the kind of investment. It's very important to ensure that applicants understand the investment they're making. In CBI and RBI, they're different routes, so you can invest in a contribution, a non-refundable contribution to governments. This is a very popular route within the Caribbean. You give a contribution towards the government, and I mean, I could speak for hours on that as well, because I've seen the benefit over the last 2 decades of what impact that's made. But then there's also the real estate element, and we've seen a lot of irregularities in that. So it's very important to just make sure that clients are investing properly in terms of that. The ROI on a CBI real estate investment is very different from the day-to-day real estate investment you would have ordinarily. And then their fund options. So I think carefully understanding what that actually means, and working with the right agents. So people may have pretty websites and they may seem to be saying the right thing, but working with a trusted advisor who's been in the industry for a long time, understands the nuances of what obtaining a second citizenship or residence requires is really important, because this isn't a short-term decision, it's a long-term decision. So that's where I start.
Sure. We also have one actually now from the UAE, so Dubai. Priya is asking, are clients becoming more selective about program quality and long-term credibility rather than simply looking for the fastest route to a second passport? And how does that shift in client sophistication change the advisory conversation?
Well, first of all, absolutely. Clients are becoming a lot more discerning. And I think that's a really healthy development in the market. So it's no longer about who can issue a citizenship to me the quickest. It's really asking key questions. The industry's been around long enough now, it's St. Kitts and Nevis is 40 years, but really the industry as a CBI industry has been going for the last sort of 18 to 20 years. So there's enough data to allow people to understand what programs have worked, what hasn't worked. So, I keep on talking about due diligence, but it really is a critical factor in how governments decide on who they're going to make citizens. Because when you are walking through an immigration control, you want to feel proud of the citizenship you hold. I think also, while speed and price may have been quite important previously, it's moved on. It's moved down the list. I think durability has really kind of moved up. So you're seeing sophisticated clients ask very pointed questions around the quality of programs now. And that's refreshing because it means that they themselves are doing more research around the question and asking their advisors to look at how this will work in the bigger picture of their planning.
Okay, thank you. We've got one now from back to Switzerland, actually. So Zurich. So Thomas in Zurich is asking, there's been a significant discussion around European programs following the regulatory changes of recent years. For clients specifically interested in European access and mobility, what does the realistic landscape look like today?
Yeah, I mean, we certainly have seen the regulatory environment in Europe tighten materially. It's also had an impact on other programs around the world. What we've seen is perhaps a move away from kind of the citizenship product and rather looking at kind of a residence product. We have seen a lot more European countries also come up with residence programs, which has been quite interesting. We've seen, Greece and Italy that were previously quite high tax jurisdictions, but they've changed their legislation to make it interesting for individuals to come into their country and be kind of an investor visa resident. So we're seeing a shift, although in terms of the scrutiny around the programs, I don't think that pressure is going to let up anytime soon. So we'll have to see how it plays out.
Thank you. We also have one last one here from Amelia in Manchester in the UK. How should advisors assess whether a citizenship or residency program will remain valuable over the long term? What are the indicators of durability that hold up under serious scrutiny? Great question.
Yeah, I think I touched on some of those a bit earlier, but I'll kind of reiterate because I do think it's a really important question. If you're making a decision today, you want to know that in 10 years' time or 20 years' time, that the credibility of the country and the citizenship holds up. And I'll start with, I think, first of all, is the stability of the issuing state. So you really want to look at the country, look at the history of the country, when did it become independent? What is the government like? What have the governments been like for the last, 15, 20, 25 years? What is the legal basis that the country operates from? Is it a common law jurisdiction? Is it a civil law jurisdiction? These are all elements because in the long run, it indicates how laws could change. I mean, none of us has a crystal ball. So, for example, like in the US now, where they were sort of saying, well, birthright citizenship needs to be, taken away. Obviously, that's been overturned, but laws can change. So you've just got to see it in the bigger picture. The next is obviously the rigor of their due diligence, and I know I've gone on and on about due diligence throughout this webinar, and the reason I've done that is because I have seen the programs that have just flopped and failed because they don't have a strong enough due diligence. And when we say a strong due diligence, I'm talking about the kind of due diligence infrastructure that countries, the Caribbean countries have. They have been so scrutinized. And when scrutinized, it's actually revealed how strong their DD has been because they go through external due diligence, they go through Interpol, they go through, there's 6 or 7 different layers of DD. And why is that important? I mean, it's a cost to the client, it's a cost to the country, but at the end of the day, it's a predictor of, the legacy of that program. So it's really, really important. I think the third thing is longevity and track record. So, for example, St. Kitts and Nevis, it's operated since 1984. I have seen programs that popped up around the same time that people don't even know exist anymore because it was a fly-by-night program. We've seen programs that came up in the 2000s. I mean, Ireland had a citizenship by investment program, by the way, even though it's our number one, ranked country in the world at the moment. It had a program. So programs do come and go. And I think a country like St. Kitts and Nevis really is the poster child of how a good program can kind of jump through the loops and work through the challenges to ensure that it always improves. I think go ahead.
Just conscious of time. I mean, if I could ask you to give, let's say, a 30-second answer here. If an advisor hasn't had the conversation seriously with a client, Micha, where would you suggest they start?
So I would say that the first place to start is to find a credible citizenship by investment, residence by investment advisory firm. There are a lot out there, but as I said, don't go for the company that has the website with the bells and whistles. Go for a company that's been in the industry for a long time, really understands the dynamics of CBI. So that's critical. I mean, CS Global, we've been around for 15 years. We were happy to feel that I've been in the industry for over 20. I've seen, as I said earlier, I've seen programs come and go, and I've really seen the back end of programs. So we've got a good understanding of what's required to ensure that our clients have the best results for their future.
Well, Micha Rose, thank you so much. I think we're just about on time there. It's been a really excellent and comprehensive conversation. I found it absolutely fascinating personally. It's given us exactly the kind of grounded, data-led and practically useful discussion that our network comes to us for. So to everyone who joined us today, thank you. A recording of this session will be available shortly and will be circulated to all registered attendees. The World Citizenship Report 2026 is available through CS Global Partners. Please visit csglobalpartners.com and connect with the team directly if you would like to explore any of the topics that we've covered today. And if you're not connected with Private Markets Group, whether through the intelligence platform at privatemarkets-group.com, UK Private Wealth Magazine, or the flagship UK Family Office Summit in Oxford in 2026, which is taking place on the 24th and 25th of November at the Randolph Hotel in Oxford. We would love to have you as part of the community. I'm looking forward to moderating a panel there personally. Thank you, especially to you, Micha Rose, and thank you all very much. Goodbye for now. Thank you.
What truly defines the good life in 2026? Is it economic growth? Or is it something deeper, such as healthcare, sustainability, safety, and long-term stability? At CS Global Partners, we set out to answer that question. The Good Life Index 2026 ranks 188 countries to determine where people truly live well, not just where economies grow. This year's ranking combines two globally recognized measures: the Human Development Index, published by the United Nations Development Program, which evaluates health, education, and standard of living, and the Environmental Performance Index, developed by Yale and Columbia Universities, measuring sustainability, climate action, and environmental health. In a world redefining prosperity, GDP alone no longer tells the full story. Quality of life now depends on resilient healthcare systems, environmental responsibility, social cohesion, and long-term stability. For globally mobile families and investors, these factors are no longer optional. They are strategic. So which countries lead the world in 2026? Two nations share the #1 position: Norway and Germany, both scoring 89.9. They're followed closely by Switzerland, Finland, and Sweden. Rounding out the top tier are the United Kingdom, Denmark, Luxembourg, Hong Kong, Monaco, Iceland, Ireland, the Netherlands, and Belgium. Norway stands at the pinnacle of the Good Life Index in 2026. With a life expectancy of approximately 83.6 years, universal healthcare, strong education outcomes, and one of the highest GDP per capita levels globally, Norway demonstrates exceptional human development. But what sets Norway apart is its environmental leadership. Ranking 7th globally in environmental performance, it leads in renewable energy, biodiversity protection, and climate resilience. Combined with a 37.5-hour work week, generous parental leave, and high institutional trust, Norway represents a model of sustainable prosperity. The index also reveals shifting dynamics globally. The United States ranks 20th, reflecting affordability pressures, healthcare costs, and environmental performance gaps. Portugal continues to attract global interest, combining safety, healthcare access, and residency pathways. And countries like South Africa reflect both promise and challenge, natural beauty alongside structural inequality. The Good Life Index 2026 provides a comprehensive, data-backed view of global quality of life. It reveals not only where countries rank, but why they succeed. For families, investors, and global citizens navigating 2026, informed decisions begin with informed data. Download the full Good Life Index 2026 to explore all 188 countries and discover where the world lives best. What defines opportunity in the global economy of 2026? CS Global Partners has analyzed global economic indicators to identify where opportunity truly exists. This year's Opportunity Index evaluates the economic environments where businesses, investors, and innovators can thrive. The index combines key economic indicators, including GDP performance, economic growth, labor market strength, and inflation. In 2026, the world's largest economies continue to dominate the opportunity landscape. Across Asia, powerful economic shifts are creating new hubs of global opportunity. Artificial intelligence is rapidly reshaping economic opportunity worldwide. But opportunity does not exist without risk. Meanwhile, Europe continues to attract globally mobile individuals seeking both economic opportunity and quality of life. In a rapidly evolving global economy, opportunity belongs to those who know where to find it. Explore the Opportunity Index 2026 and discover where the world's greatest opportunities are emerging.